Welcome back everybody. I'm so excited about today's video, and the topic of today's video of course will be Amazon. I will be commenting their second quarter results. I will be commenting a lot of different things they've been doing in the last quarter, also their forecast, some additional things that they were speaking about on conference call. We will also be commenting some things that I've noticed and perhaps some of the other analysts have missed. And of course I will be speaking about price of their stock, and if I think it is undervalued, overvalued. And one hint I will give you before we start with this video is that I actually changed my mind about the price of the Amazon stock once I finish this analysis. So this happens really rare, and I'm really excited to show you what I've managed to find out. But before we move on to Amazon, let's check out my portfolio as always. I am being completely transparent with you guys. I'm showing you every single move I make, as well as my performance this year compared to S&P 500. As you can see perhaps here, from the last time I've sold 1/3 of my Equinox Gold stocks. I used to have 600, now I have 400. They went up more than 50% since I bought them, and they became biggest position in my portfolio, and I simply had to cut them a little bit. I didn't feel very good having such a big exposure to gold mining company. But I still think they have a lot of room to grow, so I kept 2/3 of my position here. And what I did, I added 20 stocks of JP Morgan Chase. I really think this bank is ran very well. They have a big reserves for their possible losses that they will have in the future caused by coronavirus, high unemployment rate. And because of those reasons I expect stock price of JP Morgan to be quite volatile in next half year or even more. That's why I bought only 20 stocks, and I'm looking to expanding this position to at least 40 or 50 stocks. But I will be waiting a little bit because I think there is a big chance of JP Morgan stocks to be going down a little bit in the next 6 or 12 months. And also I'm extremely happy to see my portfolio sitting around $40,000 at this moment. It's an unbelievable number for me. Maybe this amount of money is nothing for some of you, but for me personally this is basically all I have, and to see my investment portfolio growing to around 40,000 is really a landmark for me. So I'm really happy to share this moment with you guys. So now we are coming to Amazon. As we all know, around 10 days ago Amazon reported earnings of second quarter. So let's break down the numbers and the guidance. So Amazon reported revenue of $89 billion versus $81 billion expected. So don't forget, everybody expected good quarter. Because of the coronavirus, everybody moved to online shopping, and Amazon is the king of online shopping space. But Amazon even managed to crush those high expectations. And earnings per share came out to be about $10 versus $1.5 expected. The only slight miss we've seen at AVS revenue. AVS revenue was a little bit about $10 billion versus $11 billion expected. And they also guided revenue for third quarter between 87 and 93 billion versus 86 billion expected. As you can see, despite the weakness in the broader economy, Amazon delivered strongly and well beyond expectations in nearly every segment. So the only weak point, if we can call it weak, was Amazon's AVS. The reason for that probably was that cloud spending wasn't nearly as robust in second quarter as it was in the first, because I personally think this is because of the ramp up cloud spending in March to address lockdowns across the nation. So people expected that they will need more cloud space in second quarter, so they are already prepared for that in the first quarter. But AVS margins remained really strong. There are also several things that Brian Olsavsky, CFO of Amazon, has said on conference call that I would like to repeat here. So he said that strong top-line performance was driven by increased consumer demand led by Prime members. We continue to see high Prime member engagement throughout the quarter. Maybe the most interesting thing that he said is that Prime members shop more often with larger basket sizes, and the worldwide streaming video hours doubled year over year, driven largely by Prime Video. So essentially the company confirms top-line growth was driven by e-commerce growth in the quarter, and in addition Amazon saw a strong boost from the stay-at-home economy basically, with viewing hours on Amazon Prime Video doubling year on year. So really impressive performance. We see how Amazon captured their consumers on several different segments. They really benefited from this stay-at-home economy. But it didn't fall from the sky. They really were ready to profit from this, and kudos to them. Another really interesting thing, and maybe something that will drive Amazon's performance in the future, is this comment from Brian Olsavsky. Online grocery sales tripled year over year. Existing Prime member renewal rates improved, and the Prime member growth rate accelerated, both in the US and worldwide. So the key idea here is that Amazon's increased penetration of the grocery market. You all remember that Amazon acquired Whole Foods in 2017, and expanded its Amazon Go retail footprint. Because of consumers' reluctance to go out and purchase groceries in person, they have resorted to grocery delivery. Amazon has made a great offering to the grocery delivery market with several different products that they are offering, and they really, again, benefited from this. I really believe that growth of Amazon Fresh and grocery delivery will continue for a while, because even if coronavirus ends and everything gets back to normal, I think that consumers will realize how convenient it is to use these online services for grocery deliveries. And the third thing that I wanted to emphasize about Brian Olsavsky's comments is this. So he said that, additionally, as a reminder, Q2 is typically our lightest volume quarter for the retail business. That's not the case this year, but what that's meant is that we can flex into space normally used for second half peak demand. This led to strong operating leverage in Q2. As we move towards peak in the second half of the year, we will ramp our space needs even further, and we'll be adding significant fulfillment center and transportation capacity in the second half of the year. So what this actually means is that the company notes that it had to move into fulfillment and transportation capacity normally reserved for the holiday season in their Q2, which is the lightest quarter of the year. That goes to show just how strong demand was for the e-commerce and Amazon in particular in Q2. The company also said that it plans to add capacity in second half of the year as demand trends remain strong, regardless of the spread of coronavirus. That is what I already told, that basically even if coronavirus ends and even if everything goes back to normal, people will get used to buying online because it is really convenient. With 2 clicks you can choose whatever you want, that thing will be delivered to your home door, and even if you don't like it you can send it back extremely easily. There were also a lot of new features that Amazon has added to different segments of their services. For example, you can see here that Amazon announced new or expanded Alexa integrations with global automotive brands including General Motors, Volkswagen, Toyota and Lexus, basically the biggest car producers in the world. They also said that Amazon continues to make Alexa smarter and add more ways for customers to stay connected. What they are basically doing is that they are making Alexa more stickier for the customers, because the more Alexa customizes with customers' needs, it will be harder and harder to switch from Alexa to some other competitive device. They also said that AWS announced Amazon Honeycode, a fully managed service that allows customers to quickly build powerful mobile and web applications with no programming required. They also said that Amazon Code Guru, developer quality service powered by machine learning that provides intelligent recommendations for improving code quality. So they are basically implementing artificial intelligence which will benefit coders, and once you try this service, once you see how powerful and easy it is, once you see how it improves your efficiency, you will hardly ever go to some of the services that our competitors offering you. They're really innovating and firing on all cylinders. You can also see here that Amazon.com has rebranded its video streaming service Twitch Prime as Prime Gaming. That might suggest some ongoing support for Amazon's approach to video gaming in general after a shaky start with its Amazon Games development unit. So remember, all of this happened in only 3 months in second quarter. So imagine what are they doing on a yearly basis, on a 2, 3, 5 year basis. That is really incredible. Then you can see here, for example, Prime Video launched Watch Parties, a feature that enables Prime members to interact with each other via chat. So why are they doing this? Because you can connect with your family. Today we are all disconnected, we are all in a hurry. If you can chat, if you can leave a message for your mother, father or your child, if you see their message, you will never cancel this service, because you will simply won't be able to switch to some other service which is not providing these messages. It's only a small feature, but it really becomes stickier with its customers. I really love what they are actually doing here. So you can create and manage 6 profiles within a single account, of course, because they want whole family to stick to this service. And then Amazon premiered several Amazon original series, including etc. So they are really investing in movies, in series. Again, they are really capturing this stay-at-home economy and they are taking all segments of it. Then, if they are not innovating, what are they doing? You can see here list of acquisition they did. Basically, here you can see only the biggest one of them. There are more than 100 companies which they acquired in their history. Here you can only see 20 or 30 biggest ones, and they are doing it consistently. But they are not buying just for sake of buying some company so they can grow their revenue. They are really picking smartly and picking companies which they might incorporate in their business strategy, Amazon's business strategy. So I really love what they are doing here. I really found some really interesting companies here and which will help them become even more powerful and dominant in the future. So now we are coming to the point of determining how much should Amazon stock be worth. So if you remember the beginning of this video, I showed you that Amazon generated in second quarter of this year a little bit above 5 billion of net income. And they also forecasted for next quarter that they will generate between 2 and 5 billion of net income. So for the sake of this video, let's imagine Amazon is a company which is generating between 2 and 5 billion of net income per quarter. So I've also pulled data for several other companies like McDonald's, Coca-Cola and JP Morgan to show you that, for example, these companies are also generating between 1.5 and 3.5 billion of net income per quarter. So it's maybe a little less than Amazon, but numbers are comparable. So the biggest difference between Amazon and these companies is that basically, there are a lot of differences. But when we are speaking about net income, you have to pay almost $2 trillion for Amazon, and Amazon's net income between 2 and 5 billion, or you can buy McDonald's for maybe 100 or 150 billion dollars and McDonald's net income of 1 billion, or you can pay between 2 and 250 billion US dollars for Coca-Cola, which is generating around 2 billion of net income per quarter, or you can buy JP Morgan, which is generating 3 or 4 billion net income per quarter for 300 billion US dollars. So you can see how big is difference in the price between these companies, even though difference between their net income they're generating is not that high. But again, we cannot just compare these companies because that is comparing apples and oranges. But I also wanted to give you this comparison so you can see that if you are just chasing net income, perhaps there are better opportunities than Amazon. But again, not many companies have this stellar growth in net income like Amazon has. You can see it on this chart. So if you want something that's growing rapidly, that is dominating the world in many segments, that is innovating, like there are small startup that is coming out of local garage in your neighborhood, which is also doing acquisitions regularly, and on top of that, the company which has positive cash flow and which has a great, almost perfect balance sheet, you have to pay more for it, of course. I'm not discussing that at all. But again, you can see here that Amazon grew almost 80% since March of this year. So what is conclusion? Well, to be honest, when I started making this video, I really expected to conclude that this company is overpriced, that stock of Amazon is a little bit ahead of itself. But after seeing how actually great they are, how fast is this company growing, how fast is it capturing market share in different segments, how well they coped with coronavirus and how they accelerated in this stay-at-home economy, I actually don't think it is overpriced. So I actually think that Amazon is priced fairly. And don't be surprised if you see in my portfolio in next several videos maybe that I have acquired one stock of Amazon for my portfolio actually. So I'm really surprised. I basically never find myself expecting one thing and then at the end of the video actually having some completely opposite conclusion. But Amazon made it. I really think it's fairly valued, and if you are a long-term investor, you won't do a mistake if you buy this company. Thank you for watching this video. I think this is the longest video which I made so far, and hopefully you find some value in it.